Be Wealthy and Smart, episode 1494. Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why consumers are worried. According to a recent Federal Reserve Bank of New York survey released recently, consumers are worried over inflation, unemployment, and the stock market as the global trade war heats up. The central bank's monthly survey of consumer expectations showed that respondents saw inflation a year from now at 3.6%, an increase of a half a percentage point from February and the highest reading since October of 2023. Now, I just want to pause and say actual inflation is about 2.4%. That is the survey's response of what they expect inflation to be a year from now, 3.6%. Along with concerns over a higher cost of living came a surge in worries over the labor market, and the probability that the unemployment rate would be higher a year from now surged to 44%, which is an increase of 4.6 percentage points and the highest level going back to the early COVID pandemic days of April 2020. The survey also showed angst about the uncertainty translating into problems for stock market prices. The expectations that the stock market would be higher a year from now slid to 33.8%, which was a decline of 3.2% to the lowest reading going back to June of 2022. And while the expectation for equities are to pull back, respondents say they figure gold will rise by 5.2%, the highest since April of 2022. So I want to pause again and say, well, consumers are on track that gold is making new highs. We just had gold hit a new all-time high of $3,300 an ounce. And while we're talking about gold, Tim Waterer, chief market analyst at KCM Trade, said a confluence of factors such as dollar depreciation and ongoing risk aversion are working in gold's favor. Goldman Sachs has predicted a $3,500 an ounce price for gold and then raised it to $3,700 an ounce for gold by the end of the year. Now back to the survey, expectations for inflation at the 5-year horizon actually edged lower to 2.9%. The people expect less inflation, which is down 0.1 percentage point, and were unchanged for the 3-year outlook at 3%. The outlook for food prices a year from now nudged up to 5.2%, its highest since May of 2024, and was at 7.2% for rent, an increase of a half a point. The outlook for medical care costs also jumped to an expected 7.9% increase, which was the most since August of 2024. Respondents expect gasoline to rise by 3.2%, which is a half a percent point drop from the February outlook. This survey took place ahead of the April 2nd Liberation Day tariff announcement, as well as the 90-day suspension of the order a week later. However, it's largely consistent with other measures reflecting consumer concern over the impact tariffs will have, even as market-based measures show inflation worries are low among traders. And we know from my earlier podcast that consumers are concerned about inflation, interest rates being high, possible layoffs, and the tariff uncertainty. All of those things seem to be still very much in consumers' minds. We await the updated inflation data before the next Fed meeting to see what they think about inflation and interest rates, and if there are possible interest rate cuts in the near future. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.